Welcome back to Golden Rule Radio. I'm going to start this week with one word, and it is compressing. I think the markets are compressing in the last few days here. We've had an inside day yesterday, Tuesday, with the stock market. We've had the metals market compressing sideways to a little bit higher, dollar compressing down, and it looks like it's ready to make a big move. We just don't know which direction yet.
Yeah, leading up into the election, we're having like market compression, right? Like compression within compression within compression. And I think everything's counting down until November 4th when the election, at least the preliminary votes are counted. We all know it's going to be 6 to 12 more years before they count all the other votes cast. But eventually the market is going to pick a direction. I don't think it really matters who gets elected because of the amount of damage that has been done to the economy, especially the lending rates. I mean, remember a year ago before all the COVID stuff kicked off, how we were talking about what was going on with the overnight bank lending rates? Those aren't problems that just magically went away. And then we pile on top of it COVID, plus all the political, economic uncertainty this year, racial tensions across the country, and now a massive election coming up in which you could see some pretty divisive action showing up November 3rd that evening, as early as. So I think the reason you're seeing all this compression is we're coming into a breaking point, and I think everything's going to come to a head at the same time.
Well, yeah, everybody seems to be focused on the election right now, and the markets are as well, I believe, and kind of on hold in a compressing situation. Where it breaks from here, I think, will be a big move. If you want to compare this election to last election, related to gold anyway, gold was way up on election night and actually created a little pinpoint on the top side of the chart. And then when Trump was found to be the winner, actually gold sold off pretty strongly. And then it bottomed 5 weeks later. So yes, a Trump win last time was short-term negative for gold. It sold off very quickly, but 5 weeks later, it bottomed. And then here we are 4 years later, and from the high that it set on election night at around 1330, we're at 19-something hundred. So a Trump presidency has been very good for gold. And I would say a Biden presidency is going to be awesome for gold. I think that's an assumption you could make. But another Trump presidency, I think the main difference here is that we have the government still broke. Trump's obviously not as conservative as some people thought he was. He's not afraid to print money. He actually wants more money than the Democrats right now. So a Trump presidency, I think, is again bullish for gold.
Well, and you specifically look at the gold chart over the last couple months since we hit that top earlier this spring, and we've been in this compression, but the compression has been pushing down. And generally what that means is it's taking a short break, getting ready for that next leg up. When we see these compressing pennants in a downward trajectory, you're taking out standing sell orders, you're getting ready to take that next step up. Reversals tend to be a lot quicker than that. You don't get compression in the direction of a reversal. You get that compression in the opposite direction of what it's inevitably going to end up doing. So regardless of who's getting elected, since about August of this year, the market has been saying gold's going to take another step up. It's just not going to happen right away. Well, not right away is starting to pass. It's been a few months. And with the way all of these markets look to be targeting a time in the semi-near future, I think you're absolutely right. I mean, looking at the gold chart from 2016, the person that pretty much everybody thought was going to get elected didn't. So, of course, things went haywire. But it's the same thing with like gun sales from 2008, right when Obama took office. There is this panic mentality that takes place depending on your worst fears potentially being realized by whoever the next elected official is. And then you have the calm following the storm over the next 6, 8, 12 months. So in this case, the calm following the storm is us getting back to what the trend already is, and that's gold going up. So I agree with you. It's irrelevant at this point because of all the other things we talked about that had been going on prior to 2020. There was a world before 2020. I know it's hard for a lot of us to remember that, but that place did exist, and that place had problems too. So, and that place was causing gold to go up long-term over time. And Robert, I think you're dead accurate that a Trump presidency continues that. a Biden presidency greatly exacerbates it.
Absolutely accelerates it.
Because of all that inflation, added inflation to what we're already dealing with.
Right. So whoever gets elected, I think gold's trend is very clearly bullish. And between now and the end of the year, obviously, I think we're going to see some volatility. And the initial reaction in the markets due to the election, the initial reaction may actually not be the direction that the markets want to go. The initial reaction may be for a few weeks, very similar to the reaction that the market had after the last presidential election in 2016, which was gold sold off, bottomed, and then took off. And here we are. From that bottom, we're like $800 higher today from that bottom in 2016.
Right. So with all this, pretty certain of bullish future for gold. I do want to say, looking at the short-term charts, I'm pretty confident that over the next week or two, gold's going down. So do hear the difference between short-term and long-term conversation here, because gold did just come into the top end of the longer trend line while making compression into the top end of that trend line. And you can see this was my joke about compression. Inside of compression, I think we are going to come back down. We are going to retest that low. And if we see something like 1850 gold, maybe a few days prior to the election, if you can't put those two pieces together, at least back the truck up and buy as much as you can. Because at that point, you're looking at a lot of things converging at the same time around very good pricing level from fibs and compression lines and trend lines and long-term positions and potentially where we could end up going from here. So I like when we see a lot of these things all lining up at the same time around the same place. And I think that's what we're seeing now.
I agree. That would also line up with a lot of what we've talked about on the last few years of the show, where come the last part of the fourth quarter of the year, gold bottoms somewhere in the November, December timeframe. And that's been fairly consistent the last few years. So I think it's lining up pretty well to have some kind of weakness potentially between now and the end of the year. And that's it. And you better be in before the end of the year, being long gold. So your buying opportunity, yes, you could buy today. I think fast forward a couple years from now, you're going to be a lot higher with the gold price. So buying today is fine. If you get a pullback a little bit farther, that is the last opportunity I think you're going to see before gold resumes the long-term bullish trend.
Right, because as you know, when we finally broke that 1,600 number, it got to 2,000 very quickly. So when you're sitting around going, well, should I buy it 15.50 or 16 and a quarter? Or what if it gets to 15.25? You know, when you're nickel and diming 10, 20, 30 bucks up and down, and next thing you know, it just moved 500 on you. Those moves can be very quick, and it's real hard to catch them.
Yeah, and you're not going to want to miss this next few years in the gold market. It is going higher, and so you want to be in. If you have questions about specifics on gold, we're available to talk to you, so feel free to give us a call. Let's jump to silver. Silver has also respected the downward trending trend line that we've had in the same type of thing with gold, but it has popped its head up a little bit above it. Wednesday, as we're recording, it pushed today into the short-term previous highs, and it failed, at least for now, it's failed to really push through those highs, so could be having a very short-term resistance at these previous highs and then kind of follow the trend line down, thinking again that it'll follow gold. Hopefully we're going to get a little bit lower entry points here with silver between now and the end of the year. That's what we'd hope and expect. But after that, you want to be in because silver is long-term bullish.
Yeah, I think silver's got a pretty defined ceiling here, at least in the short term, around 27. Like you said, we've pushed up to this short-term high, so we're kind of double tapping here, and it's been with upwards trajectory, higher highs, or at least we've had higher highs thus far. We'll probably see another one, also higher lows. I think we see some resistance up around the 27 mark. That's kind of the floor of the previous market high between 27 and 30. And then I think you're right. I think we could see it turn back down there. Now, how far it goes, I'm not sure. But if it did come all the way back down to its declining trend line, you're looking at silver at 20 bucks. And that'd be a pretty substantial drop to someone who doesn't follow the charts on at least a weekly basis like our listeners do. That'd be a pretty substantial drop that's going from 27 to 20. Big percentage. So be on the lookout for the silver opportunity. Now, $20 silver and let's say $18.50 gold is still incredibly enticing from a ratio standpoint to be able to step into silver If we saw both of those things occur simultaneously, and taking advantage of those ratios just adds more fuel to the fire when the markets do turn up, because eventually silver will flip-flop with gold like it traditionally always had. So pay attention to the ratios, not just the dollar pricing, and definitely keep an eye on the charts. I would expect a lot of volatility. I mean, you could see silver jump $5 or $10 up and down over the course of a few weeks, especially around election time.
The industrial metal we've been talking a lot about lately, platinum, has had a little bit of a breakout out of the channel that it was in. Miles, what do you think?
No, you're definitely right, Robert. I mean, the charts don't lie. We had a breakout, beautiful declining channel in platinum, sitting around the fibs. We've bounced anywhere from the 786 to the 382. We've had multiple touches of the 618, which we're back at now. I'd expect to see platinum turn back down. Now, the question, of course, would be, when we get back to the top of this rising channel, does it push back into the channel, or is that our new floor? And if that is the new floor, then you're looking at platinum probably jumping up to the low to mid 900s, where it would find its next ceiling. So telling couple days for platinum. If we continue to inch up from here, that's arguably very bullish, at least short-term bullish, short-term breakout potential, and moving us back into some higher pricing.
The last chart we'll talk about is the dollar, US dollar chart, index anyway, and because it has broken a few of the trend lines and lower support here.
Yeah, I know you pointed out that first break last week, which we didn't know if it would amount to something or not. It certainly has. Again, just like I was talking about with platinum, when you break a channel, you come back up and test that channel. That's exactly what the US dollar did. We broke below the rising trend line, the rising floor of the dollar. We came back up and tested it twice, and now we've had a pretty substantial drop in the dollar. In fact, we've put in 3 lower lows in the short term, and we're coming up on the September lows, which would be the next major line in the sand, just under 92. And to break below that, we finally get to the number that we've all been saying for, a year now, sub 90 on the dollar, possibly even into the mid 80s. That's going to be your next move down in the dollar. And again, this has nothing to do with who is going to be elected. This is just the damage that's already been done in previous years from previous economic issues.
As we were pointing out, the dollar breaking down here, and ultimately we think the dollar is headed much lower over the coming 12 months, 24 months. But I just get this feeling that it's possible that this slide in the dollar has been corresponding to the rumor about this new stimulus bill. The markets are forward thinking, obviously, and I feel like it could be buy the rumor, sell the news type of thing with the dollar. Sure. It's been sliding like this, broken these trend lines. It is actually bumping up against like the lower trend line. And I feel like if we do see the markets want to reverse a little bit from here, with the dollar having one more rally before it heads much lower, that could correspond to what we've been talking about with the gold market and the metals market, having one last push lower. So possible the dollar does find some bids here and does find some strength before the end of the year, which puts some downward pressure on the metals. I would love to see that, because I think that would even just pull that bow back just a little bit farther with both markets and allow more extension once that major trend with the dollar goes down and the major trend with gold goes back up.
So that's going to do it for Golden Rule Radio this week. As always, we appreciate you stopping by. If you liked what you heard, do the YouTube things, hit subscribe, ring the bell, join us in the comments if you have any questions, or better yet, if you want your personal questions answered, give us a call sometime. We can be reached at 1-800-525-9556. You can interact with us on Twitter at ICA Gold or Facebook at McIlvaney Financial. Thanks for listening. Have a great week.